This is a Tax Talk, a show that is dedicated to driving the dissemination of information on tax administration in Lagos State. If you're trying to improve your knowledge of the tax administration as a resident of Lagos State, this is the right place to be. My name is Oyinlola Sale, and I'll be your host for the duration of the show. We kick off the show with business news. Stay with us.
This is business news. In a bold and strategic move aimed at transforming Nigeria's agricultural economy, the Lagos State government has launched the Produce for Lagos program alongside a groundbreaking 500 billion naira offtake guarantee fund. The initiative, unveiled at the Lagos House in Ikeja, is designed to secure the state's food supply, generate employment, and catalyze a new era of national agricultural prosperity. The program was created to enhance food security and promote economic development in the state. In his speech, Governor Babajide Sanwo-Olu described the launch as a defining moment in the state's commitment to food security and economic resilience. According to the governor, Lagos has significantly increased its agricultural budget from 4.2 billion naira in 2018 to nearly 80 billion naira today, the highest in the state's history. And that's it on Business News.
Welcome back. You're still watching the Tax Talk. We have Mr. Abidin Akande, Special Advisor to the Executive Chairman of the Lagos State Internal Revenue Service, joining us in the studio to tackle a very interesting topic. If you are a keen follower of government, you should be aware of the tax reforms that have become a trending theme in the nation. In light of these circumstances, we'll be looking at key adjustments for taxpayers in 2025. What to expect? Mr. Akande, thanks for joining us again on the Tax Talk.
It's a pleasure to be here, Oyi.
Well, let's dive right in.
Right.
With the 2025 tax reforms being expected, how does LRS anticipate these changes will impact the overall ease of doing business in Lagos, particularly concerning the personal income tax system?
All right, thank you. It's good the way you have started it and coined your question, because essentially the reforms are geared towards making life easier for the business people. The idea is that once you drive business and there's improvement in business, there's going to be increase in disposable income for the employees and then the business people as well. And it is that the taxman latches onto. So ideally, it's a pro-business reform. It's not necessarily a pro-tax reform. So, but part of the consequential effect of it is that it will be pro-tax, in pro-revenue going forward.
What specific adjustments to PIT, withholding tax, capital gains tax, and stamp duties should taxpayers expect, and how will these reforms align with national fiscal policies?
Very good. So we take it one after the other, the PIT, personal income tax. Essentially what the reform is all about is that, like I told you, it is pro-business, then it is pro-poor people. That is, people at the lower rungs of the ladder. Most of the, I think it's now zero rated for them. And then for the lower middle class as well, it is pro because they are going to be paying less than what they are currently paying. It is what we can call neutral for those people that we can call upper middle class. That is, if you earn anything in excess of 20 million per annum, then of course, now for the super rich, it's a bit anti. But the anti, like I always tell people, is not really choking in the sense that as currently as we have it now, no Nigerian resident pays, that is a taxpayer, pays anything in excess of 19 naira to 100 naira.
Okay.
Now, under the new system, what we're going to have is that, yes, that for the top-end people is going to be somewhere between 24 and 25 naira. You understand? Now, you might think it's huge, but if you go to comparable economies, people at that level pay something in the range of 40 to 45 naira. And I can tell you that in some other economies, even somebody that just graduated maybe 5, 10 years ago will probably be paying something in the range of 25 to 30 naira for every 100. So really, essentially what we have done is that it's going to provide succor for those people at the lower end of the table. And it will put more money into their pockets, and then it's going to spur economic activities within the system. Whilst those people that can afford to pay the taxes will be able to pay commensurate to what, because they are using the facilities within the system to generate that level of income anyway, so you are just contributing your own fair share to the common pool.
Can you provide clarity on how the changes to the tax laws will affect the classes of taxpayers, earners in Lagos State?
The people at the lower end will probably be exempted, or they'll be paying much, much, much lower than what they are currently paying. So it will be compensated for by those people at the upper hand. But what we need to understand is that it's not really going to adversely affect the revenue of the state, in the sense that anyway, in most climes, and just like in Nigeria as well, it is the top 0.5% that accounts for close to 85 to 90% of your collections.
Interesting.
So if they pay adequately, if they pay, they disclose their income fully, then we are likely to have even more in the pool than what we currently have. But that does not in any way exempt those people that they will file their returns. The taxman knows them. So as their condition, socioeconomic condition improves, we'll be able to at least monitor them as well, so that they can contribute their own little bit into the tax pool.
And how do you monitor them?
Essentially, because the Constitution provides that as a citizen of this country, you must, at the end of the year, declare your income for the preceding year. It is a constitutional provision. It's just like you have rights, you have obligations as well. It says, yes, you must declare and then pay from your own assessment of what you think your tax is due. You pay to the tax authority. The tax authority will now review it to see whether you have underpaid or paid adequately or overpaid. You understand? So that's the way it works. And then we have access to what I can call third-party repositories of data that we can use to monitor and to confirm whether you have declared adequately and if you have not. Then for those people who claim that they don't have records, there's a provision for us to have what we can call presumptive tax regime for them, which we do. Yes.
With the recent discussions around the personal income tax system and tax compliance, how does the 2025 adjustment plan address concerns regarding equity in tax contributions, especially for informal workers and freelancers in Lagos?
It has brought everybody, it has tried to bring everybody, people you call digital nomads, and the people that you call freelancers as well, to bring them into the net, remote workers, so that it is not only those people that are in formal employment that now pays tax. So those of them who are in that digital space are also swept into the tax net so that they can also contribute there, because we'll be able to see more of what people are doing, and we can track and trace all their footprints. So that way we have a better, not complete, but a better view of all the actors within the system. So once we're able to do that, it means we can see you, we can know what we have done, and then even if you, by chance, did not file, which is contravention of the law, we can tell you and raise assessment on you based on those access to that, all those information. But like I said, there are people that just don't, because of the nature of the activities, they don't keep records. So the presumptive tax regime will be harmonized so that it will be fair to all parties across the country and within our state as well. That's what they propose to do.
How does LRS intend to improve PIT compliance with the adjustments in 2025, considering challenges in reporting for taxpayers with multiple sources of income?
Yeah, good one. So people have multiple sources of income, especially the high net worth individuals and what have you. So essentially, part of the reforms is that we will be getting information on a quarterly basis, not only from banks, but other financial institutions. They are bound by, now if it is passed, they'll be able to provide this information to us. Now, also, we have what we can call interagency collaboration, where we can see the kind of activities that you are doing in some of these agencies. So it means for you to be able to be involved in such activities, it means you have generated some income somewhere. And then we'll check our records if you have actually declared such income. Aside from that also, Nigeria is a signatory to what we call the MAC. It's a global arrangement where tax authorities, the competent authorities, share data without request. That is an automatic exchange of information. The information started coming to Nigeria in 2022, but because of the protocols that are attached to it in terms of security of data, confidentiality, and what have you, no state has been able to access that data. We couldn't access it because even we were old building. So now that we have moved to the new building, we have started the arrangement to be able to access it. They will have to come and inspect our space and certify it. And once we have that, it means we can see your global activities. So if you are a Nigerian and you are operating anywhere outside Nigeria, the information is already with FRS. We'll be able to see all that you are doing in Nigeria and all that you are doing outside Nigeria. So we pull everything together and then put it on the table for you to see that this is what we have and this is what we have declared to us. So really, people with multiple streams of income, it's always better to disclose fully because that's what the Constitution says, that's what the law says. So it's better to be, for your own reputation, to be on the right side of the law.
I know the LRS is big on technology. What role will technology play in ensuring seamless PIT reporting and compliance post-2025, especially for individuals who may still be unfamiliar with digital tax tools?
Good. From what I've told you, the deluge of information that we have, it will be humanly impossible to manually process them. So that's what we know, and we have always been. And that's why we've digitalized most of our operations. Now, we are also appreciative of the fact that there's a wide spectrum in terms of skill set available to our people, and even in terms of infrastructure that people have to be able to access those digital platforms that we have. So that's why in every single of our offices, we have help desks to assist those that may possibly want to access those things that they don't have capacity to do, and we do it free of charge, no bills to the person. And aside from that also, if you are able to call into our help center, they'll be able to address and take you through it. If you, by chance, also you are able to latch on onto our portal, we have the chatbot that can assist you if you get stuck along the line. So really, the truth of the matter is that we have focused our reforms within LRS on simplifying the processes and making it accessible to people of different capacity in terms of ICT savviness.
Let's look at adjustments to withholding tax. Could you explain how LRS plans to ensure businesses and employers accurately deduct and remit withholding tax for individuals?
Okay, thank you. The 2024 regulations were signed on by the Honorable Minister for Finance sometime last year, and it became effective 1st of January this year. We have already crafted a public notice made available through all the multimedia campaigns. Also, we have engagements with the different categories of taxpayer group that we're doing. And then, of course, we intend to maybe direct people onto our e-tax platform, which has a very robust application that allows you to actually do this filing using the right rates and using the right codes. Also, at the JTB level, there's a JTB withholding tax portal. We will also do some enlightenment. It's been on for close to 2-3 years now, but it's also something that is available to employers or to corporate entities that they can use all those, all the facilities that is there to do your deduction, even nationwide, so that you do it at just press of a button, and you address to all the 38 tax authorities, that is FRS, FCT, and the 36 states. So all those facilities are there. We will do more maybe advocacy on it to people for them to be aware of it further so that they can know. And then it's important to know that what that withholding tax regulation for 2024 did was that it brought in some people that were out of the net before, and then it also reduced the rates for some activities that have very low margin, like those ones in construction. And for those people that are non-residents, it has also had some provision for them. But you see, non-residents don't pay to us in Lagos, they pay to FRS. So I won't waste too much time on that. So, but essentially what it has done is that it has simplified the processes and procedures for withholding taxes. And then more importantly, what it has done for the average taxpayer is that if an entity has withdrawn a tax from your compensation, that entity will give you a receipt. You don't have to wait for the tax authority's receipt. That receipt given to you by that entity is valid for you to file your returns. So if you now bring your papers to us and we check within the system that the deduction that has been done from your compensation has not hit the account of the state, then that other entity will go after that other entity who will now pay it. So essentially it means that you don't have to wait for your tax credit. You get it immediately. And that's one of the major inputs from the new regulations, which I think people should take advantage of. Once anybody tells you that I've withdrawn tax, give me a receipt. It doesn't have to be a tax authority's receipt. That one is valid enough for you to do your own filing when you're going to do it. Now, what I left out before was that there is going to be a primacy of tax identity number, the JTB TIN number. Every taxpayer is supposed to have it. If you don't have it, then the person that is paying you is obliged to deduct double the amount from your compensation. So if you don't want to fall foul of that, your best bet is ensure that you secure your TIN. And it's easy to get that one because if you go to our platform, you create your PID, automatically also we generate for you your TIN. So ideally, I will advise people that have not registered that they should try and register and come into the tax net because eventually we will get you. And even if we don't get you, then there's a price to pay, which is double the rate of your withholding tax.
Mr. Akande, thank you for bringing your experience and expertise to this discussion. Great insight, I must say. But right now, we need to go on a quick break. And, of course, we'll be right back. Right now, the Tax Talk will be going on a short break. Do stay with us.
Have you had a hard time with taxes and understanding tax administration in Lagos State and the complex nature of Nigerian tax law? Do you know what agency or tier of government collects the various types of taxes? Have you ever found yourself asking any of these questions? Join us for your favorite program, The Tax Talk, your infotainment program.
You're still watching The Tax Talk. A quick reminder that the show will be on our YouTube channel, so you can always refresh your memory. Mr. Aberdeen Akande is still here in the studio, and we are examining key adjustments for taxpayers in 2025. What to expect? Like I said earlier on, that you were really insightful in terms of your, conversation and what you said. But let's go to the next set of questions. How will the adjustments to withholding tax impact high net worth individuals and professionals in consulting, finance, and technology sectors?
It's neutral for them. Like that's what I say, because essentially it's the same thing they've always been doing, and the rate has not changed. For professionals, it's still 5% and what have you. But for the high net worth individuals, especially those who are directors, now what it has done for them is that, unlike before, when it was 10%, it has gone up to 15%, which is a bit more reflective of what the rate should be. So the advice is that even if you get paid director's fees, put it at the back of your mind that at the end of the day, the tax authority will sum up all the aggregate income and put you into the band which you're supposed to be. Most likely now, if you're going to be in that band, it will be something in the range of 24%. So when you, when your company has deducted 15, just don't spend the net. Put aside another 9% that will take care of where eventually what you're going to pay to the tax authority. I know of, is late now, a traditional ruler who was a director in one of these IOCs, one of the big, and the truth of it is was a professor, and it happened to him just 1 year, and he said, the following year, please deduct my tax at the appropriate rate, so that once you are giving me the balance, I know that's the money I have. Don't deduct 10%, and then the taxman comes next year to say, bring another 8%. I think they did it for him until he passed away, which is very good. Yeah.
Speaking on the capital gains tax adjustments, how will LRS ensure that taxpayers, particularly those in real estate and capital markets, understand the implications for their investment returns? Okay,
good. Now, the beauty of it is that some REIT, that's real estate, whatever, investment schemes are actually tax exempt. But the truth of the matter is that capital gains tax is also personal income tax. So what this new bill has done is that instead of the fiat flat rate of 10%, it said your income that you have, the gain that you have, it's an income to you. It will eventually be taxed at the rate of the personal income tax using that same table. So that's number one. Number two is that if it is gains arising from loss of employment, now the threshold has moved from 10 million to, so the first 50 million, it's zero. You're not paying anything on it. But anything after 50 million, you pay eventually at the rate of the effective PIT rate, which is that, unlike before when it was just only 10%. Now, that one also, it's reassuring because it's a fairer way of assessing people to tax so that we all contribute our fair share to the common pool.
Sir, could you tell us more about the capital gains tax?
Okay, essentially, it's a tax on gains. But what gains means is that it's an income or profit that you make. So what it covers is when you dispose of capital assets and then you make a gain on it or profit on it, that profit is seen as income in your hand. And that's what the tax is all about. That, well, you should pay tax on it because you bought something for 5 naira, you are disposing of at 100 naira, that's 95 naira gain. So take all your cost of maybe advertising, selling it away from it. Then the remainder, you should pay tax on it. It used to be just a flat rate of 10% before, but like I said, under the new law, it will be taxed under the PIT rate. Now, also, if you lose your job, there's a compensation that you get. So it's deemed as a capital income, a kind of for you. So there's, of course, also there's a tax on that one. It used to be at 10%, but you had a threshold. If it's 10 million and below, you pay zero. But now under the new law, it has been increased to 50 million. So 50 million and below, you don't pay anything. But after 50 million, then it's subjected to tax. Of course, to be at the personal income rate. That's what is in the new act. But under the existing law, after 10 million, you pay 10% on whatever your payment has been made to you for loss of office.
Mr. Akande, I want to sincerely thank you for your time on Corporate Talk today. It's always a pleasure having you on the Tax Talk.
Same here, Oyi. It's good to have you. Thank you for having me. Thank you very much.
That brings us to the end of our chat on Corporate Talk with Mr. Abideen Akande, Special Advisor to the Executive Chairman of LRS. Our entire discussion can be revisited on our YouTube channel. Please subscribe to our channel, like, comment, and share our posts. The show kicks into the next gear when we return from this break. Stay with us. In life, some things are said to be constants. Rain, thunder, birth. Add tax to that list. That's why having a grasp of issues relating to tax, taxation, and tax administration is a must. The Tax Talk helps you build that understanding week in, week out. That's the reason we ask that you join us same time next week on the same station. My name is Oyinlola Sale. Bye for now.